Talk about unexpected surprises. So you were separated from your employer, and suddenly this check shows up. What not to do with it, and how fast you have to handle it in this video. Hey, I am Allison Eddings. I am a CPA in private tax practice. Welcome to my channel. If any of this content is useful and helpful to you and you think it might be helpful to others, I really would appreciate it if you would subscribe to my channel. It really does tell YouTube to push this content out to more people, and the more taxpayers that know how to take care of themselves, I just think that's a good thing, right? That is just nothing but good. So this week's topic, you got a check from your former employer, or at least from the 401k. It's going to happen a lot of separation of duty due to COVID. People who had 401ks, it may only be a really small amount. You may not even realize you had a 401k. Or it may be a big amount and you've just been so busy at the new job or something else has been going on, you didn't have time to deal with it. Well, after a while, a custodian's going to give up. If you haven't prepared rollover documents, your custodian's going to give up and they're going to cut you a check. Don't cash it. If you don't want that income, that money, I won't say income, if you don't want that money to suddenly be taxable, don't cash it. Just because a check has shown up at your doorstep doesn't mean you have to put it in the bank, but you do have to do something with it. You can't just leave it and hold on to it. You have 60 days. So if you have a new employer with a 401k, you can contact that plan administrator and ask them how you can put that in there, because I don't know about you, but the less accounts that I have, the easier. I know it's kept me at a not so great bank for a long time. I did finally get up and fix that, but there was a long time that I just kept saying, next year I'm going to do it, next year I'm going to do it, next year I'm going to do it, and finally I did it. But the fewer accounts, probably the better. But if you don't have a 401k anywhere else, you can call Merrill Lynch, Charles Schwab, what's Marcus? That is Goldman Sachs, any brokerage house, and tell them, I have a 401k check from my former employer. I need to roll it over somewhere. They will walk you right through it. Because what happens if you don't do that, if you put that check in your bank account, it is now taxable income at whatever your incremental rate is. Plus, you have a 10% penalty. So that can be painful. If your incremental rate is a nice marginal 22%, but then you have a penalty of 10%, plus you live, let's say, in the state of South Carolina, 7% tax rate. How much is that? 32 plus 7? Is that 39%? That's going to hurt come tax time. So much better if you can live without it, just to keep it for your retirement. So I hope this was helpful information for you, useful. If it was, please do subscribe to my channel or share it with your friends. Thank you so much. Have a great week.